After a week of failed attempts to agree reforms for Greece that would unlock 7.2 billion euros in bailout aid, Eurozone finance ministers will make a last attempt this weekend to strike a deal and prevent a Greek default. With me to discuss the talks and what's at stake is Philip Stevens, our chief political commentator. Philip, we've had days, weeks, maybe even months of last-ditch talks on Greece. Where are we now? Is this really the end of the road?
Well, I think if it's not the last, it's the last before the last. On Tuesday, Greece is due to pay back a very substantial loan to the International Monetary Fund. The expectation is that unless some sort of deal is cobbled together with creditors over the weekend, it will miss that payment on Tuesday and will therefore default. And the question is, does default lead to exit from the euro? So this is, if not the last moment, it's 1 minute to midnight, if not sort of midnight itself.
And what are the issues now that divide them? We've heard a lot of talk about pension reform, tax increases in VAT. They're wrangling over some very fine details here.
Yeah, well, in a way, this is a negotiation on two levels. What we're seeing is the technical negotiation, whether the pension age in Greece, for example, goes up to 67 in 2 years' time or 5 years' time or 7 years' time, whether a proposed increase in VAT is across the board or some foods are exempted. Those very precise details. And in a way, it looks, well, one thinks, well, look, why can't they just compromise? But the reason is that those small differences disguise very big differences, and they're about trust and the willingness from the creditor's perspective of the Syriza government in Greece to carry out an economic and political reform program in good faith.
Because we've been round these houses with Greece before, with previous governments, indeed a centre-right government, and it didn't work out. So what you're saying, I suppose, is that the problem on the creditor's side is whether they really trust the Greek government to go home and implement these reforms and carry out their side of the bargain.
Yes, and I think it's even more difficult than with previous governments, because although previous Greek governments have not actually kept their side of the bargain, they signed up to the deal, as it were, fairly easily or relatively easily. This government is a government that fundamentally disagrees with the, if you like, the market economic system, with the whole sort of presumption behind the program. Syriza Mr. Tsipras wants to get out of the program entirely. That's why he's pressing for debt relief. So there's a huge philosophical as well as a practical divide. So this is what I think, this is why people are so insistent on getting the detail right, because they really don't trust the Greeks, to put it bluntly, on the big issues.
So what happens if the talks break down this weekend and we don't have a deal? And what's your sense of what is the likeliest outcome?
Well, if we don't have a deal and Greece does in fact default on Tuesday, I think we'll see, the first thing we'll see is capital controls in Greece to prevent, a complete run on the banks. I think we'll have to see, ironically, some emergency aid for Greece from the rest of the European Union, from the Eurozone. And then I think we're in a sort of no man's land of, does this mean it has to leave the euro, or will we have another set of negotiations, a post-default set of negotiations about whether Greece can stay in the euro or not?
And your sense of what the likely outcome is?
My sense is that they will kick the can down the road again, but if I was asked to bet on it, I wouldn't bet much more than 10 euros.
Now, there's a bigger strategic picture at play here. In the end, can Angela Merkel and the other European leaders take the risk of Greece falling out of the Eurozone and possibly the EU itself? Vladimir Putin, the president of Russia, is no doubt looking on at this great wrangle with some relish.
You're right, there's a big economic risk and also the geopolitical risk. I was in Berlin the other day and you get the sense that Angela Merkel is torn. On the one hand, she agrees with her finance minister, Wolfgang Schäuble, that the rules have to be kept. The Eurozone can't go on if one member is allowed to break the rules. On the other hand, she sees, in the tradition perhaps of Helmut Kohl, Germany as the guarantor of European unity, and she understands the unravelling that might happen if Greece fell out of the euro and then perhaps out of the European Union. And of course the Americans are pressing very hard, saying, look, this part of Europe, the southeastern part of Europe, is strategically vital. President Putin is waiting there in the wings. He's already causing trouble in the rest of the Balkans. Don't let Greece go lightly. So there's a lot of pressure on her in both directions.
So thank you very much, Philip. This is clearly going to be a crucial weekend. If you want to follow developments on FT.com, our Brussels team will be following throughout the talks and throughout the weekend.